Alright guys, it's been a while and it's been a bit late, but here it is. 3 stocks you really need to pay attention to in May. Now guys, we do not own any of the shares mentioned on the slides, and of course, do not take what we say as financial advice. Do your own research. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. Okay, the 3 companies that we're going to be assessing today will be Hume Industries, not humid.
Yeah.
I know it's been very humid in the past few days, that's for sure. VS Tech, they're into electrical ICT stuff,
distribution,
and Radium, which is a pretty new IPO. They are famous for, I would say, what is unique about Radium is that they are going around like promoting very, very aggressoving.
Yeah, on social media.
On social media, they're going on
basically
channels.
everywhere.
Except herself. Going on channels promoting itself. So that's what, put a question mark for us, but we'll talk about Radium a bit later on. So let's go to Hume Industries. So they are in the cement business, as you can see, and recently the price actually has gone up nearly 40%.
Yes.
But if you look at the lifetime, it's down half, and if you take the height, I think it's down probably 70-80%, right?
Yeah.
So what explains this pump, Jonathan?
Yeah, okay. So the first one, it's pretty obvious, is that they are back to a huge black. Like their profit actually more than 5 times in just a span of 1 quarter. So that's actually very impressive. And not only when you see this kind of profit jump, you expect that maybe they have like a other income, like maybe they dispose some properties to get that money, right? But but it's actually from their revenue, it's from their core business. And if you look at previously, they all have been like making losses in the past few years. So there's some excitement around this company. Now, if you have a look, right, in their revenue, it's about 50% up, but the profit side is up about 13 times in 1 quarter. Yeah, so we shall find out more later on. But anyway, this company is still in the net debt position. So nothing too fancy. That's something you need to know. They have a lot of short-term borrowings. Yeah, that's one thing you need to know. And cash flow wise also has been pretty decent. They have been getting a lot of money into the company.
It seems like there's been I'm going to guess it's something to do with cement prices. That's what I'm going to guess, right?
Exactly, yeah. Okay, so yeah, you're right. If you read in their reviews, performance reviews, right, you notice that they say that they have managed to charge higher cement retail price, and also they did have a lot of sales volume in the recent quarter. That's the reason, because there's a lot of infrastructure spending and also construction going on now that we are going back to recovery already on the construction side. So yeah, all these things are picking up, which resulted a high demand for cement, which allow Humid to get a higher revenue and profit. And all of these revision in prices actually managed to offset the increase in input costs. So for example, the coal and electricity. But later I'll show you a little bit on this chart on the coal side, right? So you notice that coal price has actually started to like drop quite a lot, although it's still very high compared to like the past pre-pandemic years. But the fact that it went down from its peak, right, that's actually a pretty good sign. And also you notice building material, this cost index, you can get it from DUSM. The prices is actually been growing about 10% year on year.
Right. This is for coal or cement?
Cement.
Okay.
And then there's coal. Coal, it's more of the input cost.
To understand it clearly, the cost, one of the big costs for Hume Industries is coal.
Yeah, coal and electricity, and then the product that they're selling is coming from the cement price.
Right. So that means they've got 2 engines. One is their input cost, which is coal dropping, so cost is dropping, and then revenue is going up because ASPs for, I'm not sure if they use ASP, but cement prices.
Yeah, they say retail selling prices.
Yep.
Yeah. But it's still high for coal, so we shall see whether in the next few quarters whether this price will start to drop even further. Okay, so this is basically a very quick summary, a quick takeaway on Humid. So number one is definitely the higher cement retail selling price and sales volume that help them to improve their profits and sales. The second one is more on the recovery on construction industry. That's what they mentioned. Right now, that all of these activities are starting to pick up after pandemic, so it is a good sign for cement suppliers. And if you do not know already, actually in 2019, there was 3 cement supplier in Peninsular Malaysia. So one is definitely the MCM or Malayan CM, Hume CM, and one more is Lafarge. Yes, correct. So Lafarge actually got acquired by YTL as cement, but it's actually under Malayan CM.
Okay.
So right now there is a duopoly, and Malayan Cement is actually, these two players are trying to charge higher prices since they got control of the market. And so far we've been seeing, that's why you can see like sales volume, selling price, everything is going up, just because of these two players just controlling the supply and demand.
Yeah, you know what is very interesting is that, so I think long-term viewers of our channel know that we're not big fans of the construction industry. But if there's one area that I will consider putting my money into, it will be areas such as cement, such as pilings and things like that. And the reason is because these guys tend to get paid the fastest.
Yes.
I'm not sure if you ran the numbers on their inventory days or their cash conversion cycle. They would be, compared to the other parts of the construction industry, a lot smaller.
And a lot faster.
Sorry.
Because they are, I believe in construction phase, stage 2, is it stage 1 or stage 2A is a piling stage, and that's where you start to put your cement.
Piling and cement, right? So then the question is, if you do not pay, if you try to play credit terms with cement players, then the cement guys will be like, okay, we don't sell to you. Because it's the very thing that trampolines or like kickstarts the entire project. So without it, literally nothing can happen. The development, the wirings, whatever, the design, and then the sales office.
I believe there will be a negotiation. If let's say you want a delay, maybe they'll charge higher price. If they want faster,
and they can afford to do that, especially now that we know that there's some sort of duopoly, right?
Yes, exactly.
So that is that's what makes this part of a very unattractive industry attractive.
Yes, exactly. So now the big question is whether this company will go back to 2014 to 2017 level.
Right.
So 2014, 2017 level, you're looking at around share price like 3 to 4, and the highest is around 5 ringgit per share. We're not sure. I mean, because if you look at financially, they are actually making quite a lot of money back then. So if let's say in financial year 2024's number will be around the same as financial year in 2015 to 2016, then maybe we will see something like that happen in the near future. But we shall see whether they can deliver for Hume industry. All right. So that is it.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
And the second company, which is also something that we have actually looked about for a
We've
few months
invested
back.
before. I think we made like a small amount of money.
Very small.
Then we exited it just when it went up
even more.
A lot more. It's standard, you know.
Yes, exactly. So if you look at the entire history of this VSTEX share price, right, it actually has went up. Not a lot. I mean, for the past 10, 13 years, it's only up like 195%.
Most of it in 2020.
Yes, exactly.
Onwards.
In 2020. And then recently there's also a slight pump, like around I would say 10 to 20%.
Yeah, it's a 40% from the bottom here.
If you count it from the bottom. Yes, exactly. So we shall have a look. Okay, I mean, nothing interesting too much, because if you see their revenue and profit has been very slow paced growth, very stagnant. But if you look at recently, they actually made about 40 million, which is about almost half of what they made in 2019. So that is going to be pretty interesting. So we can see whether they can sustain these numbers in 2021 and 2022. That's actually the period where the smartphone, ICT, everything has been popping up. There's a lot of consumer spending.
It seems like they might be on track to beat 2022's earnings.
We shall see. We shall see. We will never know.
Or at least around match if you prorate, right?
Yes, exactly.
Yeah.
Okay, so again, nothing fancy. Top line is going up 3%. Bottom line has been going up 25%. That's very fantastic. Cash flow wise, it has actually dropped a bit. I mean, they are not really making as much as what they do in profit. The reason why they cannot really get a lot of cash upfront is because they are distributor of ICT. So I believe there's an agreement to you that say you won't really get the money straight away. Like, you have to wait for your reseller to actually sell the end product. Then only I think you get that money.
Right.
Yeah, so that's
but it's an improvement still, right?
Yes,
when
exactly.
you look at the year,
yes, exactly. Years. So I think this type of company, you cannot really straight away value their cash flow because they have all of these credit terms with their suppliers and with their customers.
Yeah.
So I think it's something
what you could do is you could take maybe a 3-5 year period of the cash flows and then average it out.
Yes, exactly. Yeah, that's one way you can do it to value their cash flow. Okay, so this is the segment breakdown. At the moment, there's not much improvement coming from the ICT distribution. So ICT is basically they distribute smartphone, tablet, laptops, everything. And then enterprise system is more towards catering the public and private sector. You mean your data system, enterprise data system, still what your hardware, software, and all those kind of things. Yeah, that's coming from Cisco. Yeah, and all these kind of Microsoft. Yeah, all these kind of companies. So that segment actually got a huge bump about so there's an improvement of, I would say, around 15%, 15 to 20% ish, which is pretty good considering that they can manage to offset the amount lost in the ICT distribution. So and from what I read from the annual report, this enterprise system has a better margin than ICT distribution.
Right.
Yeah. So this, I cannot remember what is the margin. I think it's like 5 to 10%. This one is like less than 5% ish.
Right.
Yeah. Gross margin. Alright, so this is the final takeaway. Yeah, just now I mentioned that the enterprise system profit margin is more than ICT. So that means we can foresee that the bottom line will improve quite a lot if, let's say, this manage to sustain in the next few quarters. And then they also did mention there's a slowdown in consumer market. I mean, that pretty much explains why the revenue from ICT distribution dropped quite a lot. And also there's a higher project transaction due to demand for cloud service and data center. So this one, they have been stressing this quite a lot since 2012, 2011. That there's a strong demand for this. So we can anticipate their enterprise system segments contribution to be much higher.
And how much? I just want to see how much is it bigger. Sorry.
Yeah. So it's about 50 lah. About there. Yeah. Alright, then the last one is more, they got disclosed that the customers for this enterprise sector is all coming from GLC and public sector. So we shall see whether there will be a more positive result coming from VSTech. I'm pretty sure they will continue to deliver. Don't quote me on this though.
Yeah.
but so far, past track record tells me that this company has been doing a great job.
Yes.
So that is VSTech.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive.
And the last one, it's a property development company, Radium Development.
Just IPO'd or...
Yes, exactly. They just IPO'd. I believe they are going public, correct me if I'm wrong, at the end of this month.
Okay.
Yeah, 31st of May. But if you guys didn't know, this company, if you manage to subscribe, it's going to be around 50 cents per share, and they're going to raise about 434 million ringgit. And if you actually notice the recent news, you can actually get 100% hit rate if you manage to actually subscribe or like apply. I'm not sure whether you should be happy or sad about this.
Many are quite sad. It's weird, right? Like, I think we were discussing before we started filming the video. If people get it, if they get people guaranteed to get it, they complain.
Yes.
If people can't get it, they complain. You know.
Yeah, exactly. I mean, I think the reason why people are very scared or they complain is because DXN, they actually recently went IPO. There was a 3 times oversubscription, but when the day it actually launched public, the company actually dropped quite a bit lah.
Is it? How do you know how big?
Okay, so it's around they start about 70 cents, then they drop like 66. So it's like maybe 5%, 5 to 8%, I believe. Yeah, but it was a drop lah, cause people expect it to go up. I mean, that's the first mindset, right, for IPO stocks. You buy IPO stocks means it's gonna go up already lah. Yeah. Then now when they see it drop, then they say that IPO is gone. No more, cannot play already.
No, it just means you don't understand market.
Just want to have a look at their financial, how have they been performing. So far they have been doing quite decent. Not to say there's a very exciting growth. But the thing that they actually managed to make more sales during I would say a COVID-19 year, 2020. So that is very impressive. 2021 there's a drop, and then we still don't know what is 2022's number. But so far, profit-wise has been doing pretty decent as well. Actually nothing much to comment on. I mean, so far the numbers looks alright lah.
Well, what I find good right now is that one thing I like in companies, right, is when they drop in their revenue, but their gross margins actually don't change, and in fact it increase. At least this is, to me, it's a sign of some sort of skill or capabilities by the management or discipline, where they are able to control their costs with the business that's coming in.
Yes.
Right. And that's something that we also try to do at FIRL and all that. And so I have a lot of respect, right, for people who are able to do this. And it seems like they can do that.
Yes, exactly. And best if they can even scale further.
Yeah. So, but scale is like, it depends on your industry. It depends on a lot of factors whether you're able to do it, right? So I think I would assess any management on the basis of the environment that they're in. So Radium is in property development, right?
Yes.
We know that is not an easy place to be. So
exactly. All right. So now we have a look at their balance sheet. Right now, I believe they are in a net cash position. So previously it's quite in a net debt, but recently they managed to get a lot of cash in 2021. So if you actually minus all of this, they are in a net cash. And They also did issue a preference share during 2021, but that actually didn't really help to boost the cash. A lot of cash is because they managed to collect it from their operations.
Right.
As you can see in here, in 2021, so that actually there's a reduce in contract asset. They managed to collect a lot of money upfront already. So 2021 is the year that they managed to get a lot of hardcore cash. So that is very good. Okay, so this is the final takeaway again. We mentioned that this is I believe, one of the only IPO company that appeared a lot in the media. Like not only like those investment bankers platform,
social media,
but social media, YouTube.
Yeah, very aggressive.
It's super aggressive. I'm not sure why. Maybe it's also because to promote their company lah. But other than that, I just think that they have been very hardworking.
Yeah, I think it's always good to put this on as a goggles or a filter for any investor when companies are very
aggressive.
They are. We don't want the complete opposite of the company not talking to anyone at all.
Yes.
But we do also want, when I start appearing on a lot of these mainstream financial YouTubers or anyone, right? Then straight away, you're like, okay.
Yeah.
It seems like what's up, right? We are not accusing them of anything, obviously, but as an investor, you need to put the filter on. You need to be like, question mark, why is this happening?
Yes, exactly. And I think this 2 point is more of us discussing with our research team on what is actually a good property development company. So number one is that if the company managed to finish their construction ahead of time, usually they will make the most money. Not sure what's the math behind this, but if let's say you guys know, please do share with us in the comments.
I would imagine that if you can finish ahead of time means you are able to
get the money faster.
I mean, you have more time for marketing. And as a rule of thumb, right? It's not just it's like in life in general, right? If there's an issue that you need to solve or to fix, the faster you fix it, the less cost is involved.
Yeah.
Right? It's like your car, If you took 3 months to fix what you should have taken 3 weeks for you to fix, right? There's going to be problems down the road that will make things worse. Similarly, building a car is the same thing. The faster you build it, the faster you can get the money, the less,
has a cost and everything.
Bad credit, whatever.
Yep.
That's a rule of thumb, right?
Okay, that makes sense.
This is how I would say about construction as well.
Yes, and the last point is basically the cash flow and project teams are key.
Yeah.
I mean, that pretty much says a lot about property development company because some of them tend to not really get a lot of cash upfront. But yeah, these two are key. And actually, there's one more final one which I didn't put. It is that the more simple the project is, and the more I'll say easier to execute, the better.
Mm-hmm.
Yeah. So if you compare between, let's say, 100 to 150 story block building,
that's true,
versus like a maybe 50 story in a very simple town, that is easy to execute and you don't have any fancy design, right? That's actually usually the best because you want to see whether, most importantly, is whether the demand for the project is there or not, than actually making it fancy and to try to create a new demand over there. Yeah. So that's just our final takeaway in this. And before you guys go,
guys, so we have if you didn't already know, we have this thing called FIRL Pro. FIRL Pro is designed for people to shortcut their research journey, particularly useful for people who have maybe demanding day jobs, or maybe you have a family you need to take care of, especially a young family, but you still want to invest, but you realize even though you may have the capabilities, you do not have the time to put into research. Research is a long process, and so why not let us cut short that journey for you by 90%.
Yes.
Right. And doesn't mean that you're gonna buy all the companies in the reports that we produce, but at least it keeps you up to date and also speeds up your process. We also have Telegram groups where you can ask us about anything, even before we produce a report. By the way, these reports are, less than 15 minutes long to read. And we have our own portfolio as well to really, give you a reference point on how one ought to construct their portfolio. But
yes,
something to add?
Yes, exactly. So I forgot to add here, so maybe our editor can put the image over here. We're going to be increasing the price for FIRL Pro, I believe, after
end of May.
31st. End of May.
By 31st,
Yes, exactly. So the price will be $60 more expensive.
Yes.
So if you are still watching this video and you really want to try out FIRL Pro, you can actually get it at a $60 discount before the price bump. But if you're still not convinced yet, we have a free sample here for you.
Go check it out. Comment section, description is all there for you to see, get a taste of what we're all about. And also, if you do hop onto our FIRL Pro program, there's a 10-day refund period. So if you want the full thing, you don't need the free sample. After you've signed up for FIRL Pro, within the 10 days, if you feel like it doesn't really suit you, you can straight away just send us an email, and then we will process a refund by the
end of the month.
So guys, thanks for staying all the way until the end. Looking forward to seeing you in the program if it suits your fancy. And regardless whether you join the program or not, we're always grateful for your support, and I hope to see you in the next video.